Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Today we're taking a look at Bloomin' Brands Incorporated, ticker symbol BLMN. This is a small cap company with a market cap of $2.2 billion. It is a restaurant conglomerate. They own over 1,000 restaurants, many of them part of chains or franchises. And some of the popular names that we see here in my area are Outback Steakhouse, Carrabba's Italian Grill, Bonefish Grill, and Fleming's Prime Steakhouse and Wine Bar. And here we are on Bloomin's annual chart, and you'll see the share price has just stopped at the 200-day moving average. It is below the 20 and the 50 and has found resistance, or I'm sorry, has found support at the 200. One other interesting thing I'll point out on this chart, I'm going to actually zoom out to the 2-year chart because I think it's a little easier to see here. If we look at the 2-year, we draw a line from the low back here last June, and we bring it up to today. You see, this is a pretty solid ascending line here. We have 1 touch, 2 touch, 3 touches, 4 touches, 5 touches. We'd call this a 6th touch. I won't count this one. And now we're here at 7. So this has proven to be a pretty sturdy support for the company from a technical perspective over the last 15 months or so. If the line holds here, then I think we can see it shoot up back up here to the top of the range. We're looking at $28.50 or so. It seems to be the hard cap for Bloomin' at the moment. But still, if you go from $25 a share up to $28.50, that's a 14% increase or so. So that's a fine swing. Now, of course, we just had the Fed come out yesterday as rather hawkish, reinforcing their stance on inflation, and they're going to hold rates higher. So that is driving the whole market down. And that could certainly be the catalyst that pushes Bloomin' below the 200 and below that line of support. But we will see, and certainly could even present a better buying opportunity. I know I'm going to be watching this over the next several days to see what happens. If the share price goes lower, then I will certainly look to take a position here. And if we move down, we see the RSI is going lower. It's not in the oversold zone yet, but it is getting there. The stochastics are both oversold. They do not seem to be turning up yet. The volume chart shows actually a little less than normal volume, or perhaps you could say it's average, but far more red than green lately. You just have this one big red spike in here. So a switch back to green buying days would certainly not be out of order at the moment. And the MACD is well below 0, and the MACD line does not look to be crossing the signal line anytime soon. So all these things make me think we could be in a position to actually get this at a better price. Of course, the share price here is right on the 200, which has provided support, and it's on that upward trend line, which has also provided support. So we will have to wait and see. And if we switch over to the technicals, we'll see there is fairly significant short interest here at 13.5%, which is concerning, although that could also drive a short squeeze. And institutional ownership is over 100%. 114%. That makes me think there are different shares than those that are traded on the open market, and they are included here. And the debt to equity ratio shows it has slightly higher debt than average in the restaurants and bar industry. It's more debt than 66% of others in the industry, although I admit that is the least concerning of all the metrics here. When you have something, a company that needs lots of space, lots of equipment, you have leases, mortgages, those things cost a lot of money. So having debt is not unheard of. You just need to manage it well. And based on these other metrics, it seems the company certainly has the ability to do so. The PE is already low. PE is below 10. and that is lower than 83% of other companies in the industry. The gross margin of 69%, outstanding. That beats out 86% of other restaurants. These are successful restaurants. And the operating margin beats out 71% of its peers in the industry. Again, that is excellent. Now, of course, operating margin is only 7.6%, which is not a huge margin. You'll see the net profit margin here at 5.64%. That's more or less what you see here. These are businesses that operate on slim margins, 7.6% operating and 5.6% net. It does have some wiggle room, but not a whole lot. However, that's simply the nature of the beast in restaurants. And return on equity is truly outstanding. Return on equity of over 79%, and that beats out 99% of other restaurants. Truly outstanding. Growth rate, again, outstanding. It beats out 98% of other restaurants. This is a strong, growing group of restaurants. And the dividend is about triple the market average at 3.76%, and the payout ratio is low at just over 26%. So this is a very secure dividend and quite a high one, in particular for a restaurant. So I will be watching Bloomin', as I said, and waiting to see if we can get it at an even cheaper price. But if not, I'm still going to be looking to take a position in this sometime in the future here. But please let me know what you think of Bloomin' in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and discussion. But if you got something out of it, I would appreciate it if you hit the like button and subscribe to help out the channel. If you enjoyed this content, please hit the bell notification to be alerted when new videos post. Or if you'd like me to take a look at a particular company using the indicators I present here, mention that in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.